Good morning. It's a privilege for us to be here to learn from some of the leading lights in the industry. We are humbled and excited to be talking about how we can help power trust and intelligence across the insurance ecosystem for India. A brief about IDfy, our company. So we basically are Asia's leading trust stack. We are present in 7+ countries. We have 700+ employees. We help power 15 million. We basically help prevented 15 million frauds in the last year. We help power 70 million verifications every single month. That's a very large scale that we typically operate at. We are present in all the different countries that you're able to see over here. So what do we actually do, right? So Honorable Chairperson Sir basically spoke about the need for placing the customer front and center and the need for actually building trust in the entire ecosystem. And that's exactly what we help you do. So if you look at the different use cases that I mentioned over here, every time you take a loan or a savings account from any of the logos that you're seeing over here, IDfy is there helping protect either the customer, the bank, or the other players in the entire ecosystem. Every time you take a policy from any of the insurance players or you file for a claim, we help make sure that there is no fraud which basically happens in any of these different transactions. If there is a delivery partner from say an Amazon, a Flipkart, Zomato, any of the logos that you see on the basically on the slide, we basically make sure that you can have a safe interaction with them because we help power the background verification for those different clients that you're able to see there. So this is what we broadly do, and now I will talk about the way that we help power trust for the insurance ecosystem specifically. Right. So IDfy has 3 different platforms. One is the Onboard IQ platform, which basically helps power the KYC, the verifications, the initial trust stack, which are also compliance driven by a large extent in terms of performing say PAN verifications, Aadhaar verifications, AML, PP, etc. That's the first part of it. Second is the One Risk platform, which helps you perform the risk-based analysis of the customer, either at the point of onboarding or at the point of basically the claims investigation. And we will, of course, go into a lot more detail on this. And the third is the privacy platform called Privy. Of course, with the DPDP rules coming in, with the rules being notified also very recently, we are actually working with a lot of the insurance players in the industry to make sure we are implementing the DPDP rules for them very effectively, right? So these are the 3 different set of platforms that we have, and we will dive specifically into the risk-based because that's where we feel that we are able to build the trust and the intelligence in the ecosystem as well. Right. So, I mean, I don't need to tell you that how important trust is in this entire ecosystem of insurance, right? Insurance is the business of actually building trust with the customer. That's what the entire business is about in the first place. But of course, there are always the players in the ecosystem who will build on the concept of moral hazard and basically spoil the ecosystem for everyone else by doing frauds. So how do you catch them, right? And these are, of course, I mean, I don't need to go into details, you know this better than me for sure, but these are the kind of issues that the insurance industry typically faces, right? Like there is so much fraud, there's abuse, there is risk, especially in say motor, health, etc., those kind of insurances that we're talking about. There is, of course, because there is competition, there's also a pressure to be very low on cost to make sure that you're able to manage your operations very well. So that's the second type of pressure. And third is, like Sir was also saying, within all this, how do you make sure that you're able to build customer trust in a way that they readily come to you and take a policy from you, and basically trust in the overall insurance ecosystem? So these are some ways that we feel that you can help build trust in the ecosystem by putting in the right intelligence signals and making sure that the customer doesn't feel too much friction when actually coming and buying a policy from you, right? I mean, I'm just talking about 3 or 4 examples over here. You can check it out on the slide as well. We'll go into details of, say, a couple of them. Yeah. So one of the key issues that you would also be typically hearing in the insurance industry is that why there is a bit of a low trust in the industry is because customers always have this anecdote where they have heard that they have been missold a policy by somebody else, right? And that usually leads to lower trust in the system when they are going upfront to go and buy a policy. One of the solutions that we have pioneered and we are working at scale in the industry also is a solution which basically helps prevent mis-selling. Basically the PIVC call which happens, we are able to augment it via AI techniques in order to give the agent a lot of signals through which they are able to predict whether this is a potential case of mis-selling or not. And some of the signals that you're seeing are basically those which basically help the agent take the decision, right? Is the agent gender the same as that in the policy document that has been given? Number 1, right? Are there any mis-selling markers? Is there somebody in the video who is helping prompt the customer answer certain questions? That's a clear case of mis-selling, right? And similarly, couple of other questions also, and this works at low bandwidth, multiple language, etc. So using this, you can help build that delta of trust in the ecosystem by basically saying that, okay, the chances of mis-selling through this particular company are typically very low because there are these kind of checks being implemented in the first place. Second, so motor insurance typically is something which probably has the highest loss ratios in the industry, also due to the fact that the entire ecosystem is potentially prone to fraud and risk that we are talking about, also just the sheer scale in terms of the number of vehicles running on the road in the first place. How do you actually start building trust in this kind of an ecosystem, right, where it is so fragmented? There are so many different players. There is the police, there is the judiciary, there are RTOs, there are insurers, and so on and so forth, right? So this product or this signals that you would actually want to look at, what we call as Vehicle, is an industry first understanding of basically what is the risk history of a particular vehicle. Think of it this way: if a vehicle had a history of being involved in 10 rash driving cases before it came to you for an own damage policy, would you give that particular vehicle an insurance policy? And if you would you give it at the same risk premium as the others? Of course, wherever you have a chance in order to tweak that, you will do it. In TP, while it is not possible, but definitely for your OD claims, for your OD policies, you would want to do such kind of an adjustment. But how do you know that this vehicle has been part of an accident in the past or as an adverse driving history? This is the product, right? And I'll just basically give you a quick demo. Yeah, basically we give a risk report which looks something which has the contents of what you're seeing on your slide over here. This is a particular vehicle, right? Look at the kind of history that this vehicle has had in the past, right? I'll just give you a minute to probably skim through it. If this vehicle were to come for an own damage policy, would you be giving this vehicle a policy, or would you not be, or would you be increasing the risk premium? Those are actually the options that you have available for you in case you have this kind of data available, right? Now, while there are already signals in the industry which help you do this, for example, IIB also has some data which gives you data about the claims, etc. What usually also ends up happening is, because there is usually a lag in between the accident time and the claim, typically the data might not be updated or might not be timely. With our database, because we look at, say, the e-courts data, the FIR data, right at the source, at the filing of the accident or something like that, we are able to understand that, yes, this particular vehicle has been part of this accident, this particular vehicle has been seized by the police, and we are able to give you those risk insights, right? And hence, this is fresh data. This is available across all different states. And using this, you can take a risk call, saying that whether to give this particular vehicle a policy or not. Second is, the same thing can also be used during a claims investigation. If you see that the vehicle has a history of getting stolen, of getting seized by different state polices, you will also raise a question about, what this vehicle is doing in the first place, right? You would want to investigate this further. This is usually very useful for claims investigation also, simply because you would typically love to investigate every single third-party claim, right? But you also have limited bandwidth. How do you prioritize which cases to investigate and investigate more fully? These are the kind of signals which basically enable you to do that, right? So this is one more example of how we can do that for, say, motor insurance. Now, this is even better. The same owner of that vehicle that you basically saw, you were seeing that the cases on this particular vehicle were after 2015, right, as an example. But the owner of the vehicle has a history of such claims, starting right from the year 2010, right? Basically, this person owns a lot more vehicles on which there are similar claims being filed, basically saying that this person has very poor control over the driving behavior of the people that he's employing, right? So you can do, while you cannot directly use this in order to reject a claim, and that should not happen either, this is essentially an additional risk signal which helps you understand that, okay, this person and this vehicle combination presents a higher level of risk compared to the other cases that have come to you for a claim, and hence may need to be investigated more fully. Or at the point of onboarding, it's a high value OD policy that you're looking for. This person should potentially not be given a policy, or the risk premium should be increased, right? So that's the point over here. Right? Now, While the first two examples basically tell you in detail about the kind of risk signals, and honestly all of those data points are available directly from open source data. Like we spoke about both the court cases on the individuals and the court cases on the and the FIRs on the vehicle. All of these are publicly available, right? You can go to the e-courts and actually download court cases. You can go to the state police website and actually download the FIRs. The true value that the intelligence signals is needed for is actually to collate this in one single place and make it standardized for you. For example, the court cases in Maharashtra may be written in Marathi, other states have in different languages and all. Our true IP is in making it into one place and standardizing it. Now, while this and the next one are likely to be used for claims investigation because that's where the maximum investigation is needed, you can also perform a quick risk check on the individual to see the overall nature of the risk of that particular profile, be it for motor, be it for health, be it for life, right? So these are some of the signals that can be used in order to see what's the kind of profile that you're getting. Do you want this kind of a profile? Do you want to change it? Do you want to change your sourcing patterns and so on and so forth? I'll just give you a second to read through the entire list. The point over here is that there are, apart from the KYC and the AML signals and the IIB signals that you usually get in terms of basically underwriting a policy, there are alternative data signals like these that you're seeing on your slide right now that you can use in order to build a risk model on your own. For example, you might already have an area of high risk pin codes that you have present with you, where you might not be wanting to source very aggressively in the first place. But we can give you an additional aspect of geographical risk, where because we perform so many verifications across the entire country for different banks, NBFCs, insurers, etc., we also know that certain pin codes are far more susceptible to fraud compared to the others, and we can augment your negative list with ours in the first place, right? So that's basically one example, but that goes for all of the other signals that we're looking at over there. Just a quick scroll through individual risk report. This basically talks about all of the kind of risk signals that we can give you. This one is interesting, the digital footprint. Assume that there is a 30-year-old man who has come to you, but his phone number is not registered on WhatsApp. It's very unlikely that the number that he has given you is actually the primary number of the person, right? You wouldn't typically expect such a demographic not to have a WhatsApp account. Hence, you might want to trigger an additional link to the customer and ask him to provide the actual phone number. That's how a lot of the insurers and the lenders that we essentially work with are ensuring that they have the right level of customer contactability in the first place, and that becomes very important, right? I think we can go ahead. Yeah. So we spoke about motor, we spoke about a few aspects about the life as well. We can do one more additional thing, or there can be another set of trust signals which can be built into the ecosystem, of course, right? And this is based on the experience that we have had working with quite a few of the health insurers. What we have seen typically, and of course, while there is a push towards getting towards 100% cashless kind of a claim scenario, but even now, today, what we typically see is that 20 to 25% of all the claims will be coming in from non-network hospitals. And that's where the potential for doing fraud basically starts to increase. So how do you build trust in that overall ecosystem? These are some of the signals which basically help you do that, right? So, I mean, you can see some of the stats. There are 70,000 plus hospitals, 1,000 plus hospitals added per annum. And of course, there is a push towards making sure that you know each and every one of these hospitals so that you are able to do these claims in a cashless manner. But what we have typically seen is that how do you even make sure that this hospital exists on the ground, right? We have seen cases where an insurer who was working with us, they basically said that, okay, they got a 10 lakh rupee claim from a tier 2 town in Tamil Nadu. If you actually go and visit on the ground, it is just one room with a receptionist and one bed. There is no way that particular place actually did a surgery which allowed them to raise a claim of 10 lakh rupees, right? So those are some of the issues that typically happen on the ground. And we are able to give you, or there is an ability for you to get these kind of signals across the hospital ecosystem as well, which I'll quickly show. Oh, sorry. I think this This is a risk report on a hospital, and again, these are indicative signals. If there are additional signals which you feel can be added, that can also be done. This is basically figuring out whether the hospital has an identity, what is the kind of reputation it comes with, what is the income profile, and is it actually operational or not in the first place, right? These are just the basic identity checks, whether it's present on Rohini, NABH, things like that, MCA in this case of a hospital. Who is the owner, who is the promoter? What's the kind of reputation? This is very, very interesting. In case the promoters of the hospital have a shady history in which they have been accused of cheating or other misdemeanors, you know that this potentially this hospital in itself is probably not trustworthy, and you would need to investigate a bit further. The financials, in case the company is struggling financially, then there is additional incentive for the company to start to do some kind of a fraud. Hence, again, this kind of a check becomes important. All right. So that was the extent of what I wanted to take you through in terms of the kind of signals that can be built in the digital ecosystem for insurance. The key message that I wanted to leave you with, there is a need for creating that additional delta of trust in that entire ecosystem for customers to be more comfortable in buying an insurance, be it motor, be it health, or be it life. Currently, there are different gaps in the process due to which that trust is currently broken. But some of these signals, if implemented correctly, can actually help build that trusted intelligence in the right way so that the ecosystem eventually becomes safer for everybody put together. Yep, that was about it.